Well, it's interesting because, as you can see, Trump has really thrown out the conventional political playbook. He's in favor of the Sinatra one, and he's going to do things his way. And it's going to be raising uncertainty for investors. It's not yet reflected in a lot of the volatility figures we see. The VIX is still below 13%, and people seem to believe his pitch that a trade war is going to hurt them much more than it's going to hurt us, right? So we see volatility is high in China, past the February highs. Correlations are past 0.50. Pairwise, median pairwise correlations in China are really bad. Now, industry risk has shut up in China, which means investors there are clearly worried about the economy. They've given up style risk. That's no longer a factor. It's industry risk. They're all at 6-month highs right now, which means investors are really believing that this could have an impact on the economy. So I'm not surprised to see the one being fixed lower, because she's got to do whatever he can to save his economy from that.
Well, this is the thing, and you do wonder if President Trump is a bit envious of President Xi when it comes to exerting more pressure on the PBOC. It's a lot easier for him to call up his friends at the PBOC and say, hey, can we make things a bit easier here on the monetary policy? President Trump may not like what's going on at the Fed, but he also said very clearly that he's going to let them do what they will do. There is an independence issue here at stake in the United States. So on that front, he's somewhat more limited than China.
Yes, he certainly is, and maybe after November he might be even more limited, right? So he definitely wants to make sure he doesn't push things too far to cause his party a big upset in November. But what this means for investors is that you have to do a lot more stress testing than you did before, because you don't know what he's going to do next week. So you have to anticipate that with stress tests, and you have to use different correlation regimes than the ones that are currently being played out, because the ones that we see currently do not reflect the uncertainty level that he's bringing to the table. So once you look at your portfolio risk with a correlation regime from, let's say, February, when we had the big risk-off event, your losses look like 2 or 3 times more than they could be today. So that'll give some investors some pause there.
And as we do wait to see how these trade tensions actually play out, many people will say, put the noise to the side for a minute and just focus on the corporate fundamentals. We're getting a better idea of what those fundamentals are now with the latest earnings season. What's your assessment? Do you think investors can find solace in what's happening on at the corporate level? So
that's an interesting point, right? The market has this natural rhythm of risk on, risk off, where we have earnings seasons, so they listen to CEOs. They look, are all these geopolitical theatrics affecting your earnings? CEOs have said no so far. The earnings have been good, or even sometimes better. Some of them have raised their forecast for going forward. And that's why volatility and pairwise correlations remain low, because people are focusing on what CEOs are saying. But CEOs are going to stop talking in about 2 weeks' time, and then it's only Trump talking for the next 2 months. So then they're going to have this risk-off environment where they're going to say, we don't have any information on how to price this theatrics that is going to come up for sure. And correlations are going to go back up, and you're going to have another risk-off type of period.
When do you think that hits?
As soon as CEOs stop talking, and he's the only one hitting the front page, you're going to have correlations rise, you're going to have volatility rise, and then people are going to see that, look, our forecasts for returns have got to be pared down, and the risk-adjusted level doesn't make sense anymore. We have to de-risk the portfolio.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.